You asked, I listened. I just put a bowl on my head, started going at it, done. Haircuts, done. Now, let's go ahead and do the experiment. This is the government. This is crypto and, I don't know, whatever, all the other assets that you want to say. So what happens when the Fed does this? And eventually it gets kind of big like this, you know, like a bubble. But what happens when the Fed says, hey, this pump that you had, I don't think we're going to do it anymore. So then we take the pump away. Now, if you aren't pumping anymore, what happens? It's small again. So why in the world did I do this demonstration? Well, the whole demonstration is to show you guys that there are easier times. When the Fed takes this away, it's usually no bueno. So a lot of people are asking, well, is now the time to buy the dip? Should I buy altcoins now? Should I buy this, and this? Look, I'm not a financial advisor, and this is not financial advice. The probability that tokens are going to go up without this is very unlikely, and just in general for assets as a whole. Now, as soon as we get news that this go burr, and the opposite is true, for probability wise, if the Fed is like, hey, we're going to crank out the printer again, what do you think happens? Well, the probability is that they usually go up. Nobody knows 100% for sure, and nobody knows exactly what's going to happen. But you can make an educated guess, and you can also calculate probability. Let's go ahead and show you guys a little bit of the massacre that kind of happened. So a lot of projects, and even a stable coin is down 83%. Waves down 53%, Phantom down 52%. Convex 51, Thorchain 48, Avalanche down 44%, Pancake Token down 43%. A lot of these different projects are down 50%. And you're saying like, well, no, this is the bottom. It's good. It's going to be good now. It's going to go up. Well, as always, time will tell. We'll see what happens. But let's go and open up, I don't know, let's just pick a random chart. Let's do Avalanche, for example. Let me show you guys the chart on Avalanche. Now, we're going to do everything equal. And let's just say we go back to the beginning. Before the Fed did the printer go burr. I mean, they literally just pumped a bunch of money. So what was that? 2 years ago, back in 2020? Oh yeah, Avalanche was like $4. Oh, wow. Okay. Oh, $4 from 31. Oh, okay. So that's gonna be going down another 80 something percent. Ah, okay. Well, if you compare $4 to $31, you're still up, and it's still up, so it has room to go. You don't believe me? You don't think it's possible? You don't think it's true? Well, let's go and take a look at ICP. I remember when Internet Computer Protocol launched, people were like, oh, it's the next big thing. It's awesome. This is going to be great. And it dipped down to like $100, and people were like, it's the bottom. I'm buying it. Well, it went down another 90%, Johnny. Yeah, dude, this thing was like, actually it was higher than $500. It was like $700 or $800 at one point, and it just kept going down, down. And people thought, like right here, $30. They thought, it's the dip. It's in. I'm in. This is good. We're going to the moon. Well, if you would have bought that, it would be sitting down another 60, 70%. So pretty good stuff. Right now, the type of market that we are in, Bitcoin dominance is going to take over, in my opinion. I'll show you guys a couple of charts, but let me go ahead and zoom out on the 5-year chart so you can get the full perspective. As you can see here, the Bitcoin dominance chart, we're only sitting at 44%. Now, we had altcoin season for basically this past whole entire year, and Bitcoin dominance suffered from it. But if you remember, back in 2020, when everything was crashing, everything was wrecked, even during the bear market before or leading up to 2020, you can see here Bitcoin dominance still ranged between 50 to about 70%. We're only at 44%, guys. Keep that in mind. We've been at this 44 percentile, or at least below 46%, for a bit of time now with low Bitcoin dominance. So in my opinion, as the market's weakening and the Fed took this away, we're going to start seeing the market move back into Bitcoin. Now, when people are moving back into Bitcoin, that altcoin that bounces like 10% up, and you're like, I'm buying in now because it's over, the dip's over. Well, it could then quickly turn back down. There are going to be bear market rallies, which are vicious. The reason they are vicious is because people will sell the bottom, they will see it increase 10%, they will buy in because they think the bear market is over, and then as soon as they buy it up 10%, it then proceeds to dip below where they initially sold. So they're actually just diluting their share. What do I mean? Well, I sell and I get $10. You kind of dilute your value by buying the top, selling the bottom again. It's rough. It's how you can dilute your stacks. And usually in a bear market, making flips like that is hard to do. There is an easier time, guys. When the Fed turns this on, this is when you know it will be a higher probability that assets in general will go up. Crypto assets and real life assets, just in general, assets will go up. And sometimes it's not because they're appreciating in value. It just means the dollar, since they're doing this, is being pumped into an oblivion. So the dollar value is actually going down. To understand why inflation is a key metric, you need to understand how markets work. When people are fearful and scared, they go to cash. They just go to cash. And when you go to cash, what do? You sell assets and you buy cash. You're selling your asset and you're getting cash. That's just like a Uniswap swap or a Pancake swap, whatever you want to call it. You're swapping out of this asset into cash. So you're putting sell pressure here and buy pressure here. So this increases the price, theoretical price, of the dollar. And when that happens, that makes all the other assets denominated in the dollar to go down. Why is that? Because the dollar is going up in price when people are buying it. Now, the opposite is true. When inflation comes, people are scared that, oh, I'm going to lose all my value, I'm going to be diluted. And then what happens? Well, people are like, I need to buy assets. So they sell the dollar, sell pressure on the dollar, and then they buy different assets, Bitcoin, Ethereum, Tesla stocks, gold, silver, houses, whatever you want to call it. And it causes them to go up. So now the dollar is going down in value. So any other asset denominated in the dollar is actually going up. A good example is UST. Let's go and look at the UST charts of Bitcoin. And if we go to a Bitcoin UST chart, you can see the price of Bitcoin is actually worth $204,000 compared to UST. Well, why is that? Well, because people are putting sell pressure on UST, so it's making it worth less. And when you do something like that, any assets compared to UST, because UST is now worth less, causes the assets to go up in value. That's how this can be factored in. So I want to close this video with this, guys. There are going to be bear market rallies. You just need to be very careful how you position yourself. If you buy into these rallies thinking it's going to go to the moon, you can get completely and utterly wrecked. There is an easier time. I'm not saying that a bear market rally can turn into a bull market pump. That's why I still have my hodl bags. But you need to factor and bear in mind, now is not the time to degen. Not financial advice, of course. Yes, the degens could go really well if the market just turns around like that. And usually a sign of that is the Fed saying, hey, we pump it. And pump it up. And that's what will cause something like that. But until they say something like that, in my opinion, it's better to be that person who buys in after it's already increased to be able to catch the bulk of the move, even after the Fed gives us the print or go burr. Just some food for thought, guys. Be careful. There are going to be bear market rallies, and it's going to be vicious. But until there's something that completely changes or a new catalyst, right now most people are taking a risk-off position. However, if your time frame is like 5, 10, whatever, how many years you're wanting to put this into consideration, well, obviously these prices now for some of these assets, as long as they are still here, will be worth more in the future if that asset does get market-wide adoption. Now, being the guy who picks that, well, that's anyone's guess. Just because you think one project's going to make it, it's got the best this, best that, there's always such thing as a black swan. So be careful, stay safe. Let's hit you with a wisdom one-liner. Proverbs chapter 15, verses 12. Mockers resent correction, so they avoid the wise. Be safe, be good.